Hey, so this is a video on penny stock basics. We're going to make it a two-part, maybe a three-part series. We're going to cover everything from the very basic, what is a penny stock, to what broker I should use, and what are some key things to look at when trying to find a stock to trade. And then the next series we're going to cover key breakout signals, how to identify a um, where resistance and support is. We'll cover different types of orders. We'll cover what a buy order is, a limit order, a market order, a stop loss, all that type of stuff. Um, but let's get started with this. So, what is a penny stock? Well, depending on who you ask, you're actually going to get different answers. There's not a true definition for penny stocks. I consider penny stocks pretty much anything that trades underneath $2. Okay. Some people might consider a penny stock if it trades on the OTC market. Some people might consider it if it trades underneath $5. I think the vast majority of people think if a penny stock has a certain market cap, okay, if it's underneath a really low market cap, then it's a penny stock. And the problem with that argument is a lot of these penny stocks become super inflated and have bigger market caps than even some big time real companies. Um, so it's kind of a dangerous thing to look at the market cap on these penny stocks because a lot of them really don't reflect what the actual business is. But if you were to ask me what a penny stock is, I'm going to tell you anything underneath $2. Are they good investments? No, they are not. Um, Penny stocks are short-term, highly volatile, risky assets to trade. Okay, they are not good investments. Um, I've been trading penny stocks for like 6 or 7 years. I don't know how long I've been doing it, but I've been trading penny stocks for a long time, and I could not tell you one penny stock that has gone from being a penny stock and ended up trading on the Dow or the S&P 500 or even the Russell. I couldn't tell you one. Um, and that's because it's very rare that stuff like that happens. And I'm sure there is a few out there, but think about how many thousands of stocks are out there, penny stocks that is, and to think that I can't think of even one, that should tell you something. So they're not good investments. Um, so if they're not good investments, what is a good holding period? I would say 1 to 3 days is the sweet spot. If you can get into a stock, okay, that has a nice breakout and you can trade it for 1 to 3 days, I think that's perfect. If you're holding it more than 3 days, okay, you start to run the risk of the stock getting parabolic, okay, and going up too fast, and the risk of a significant drop to the downside increases. um, the risk um, of a stock increases, and um, or the risk of a stock dropping very much increases. And the other thing is, if you hold a stock for a few days and it's going against you, you might end up bag holding. So what is bag holding? It's the next question. What is bag holding? Well, bag holding is basically you're left holding, a bag of crap, right? If you buy a stock and the stock goes down 20% the first day and you still hold it, and the next day it goes down another 20% and you're still holding it, okay? And then it goes down again the third day, and then after 3 days you're down 50%, right? Most people are going to look at that and say, I don't want to take a 50% loss, so I'm going to hold and hope it goes back up so I can make some money back. And I've seen that happen so many times, and it very rarely works out. You have to have good discipline. You have to use um, the charts to tell you where support is, and you also have to use this type of rule. I think if it's not making a move to the upside after 3 days, you just got to give up on the trade. You got to get out. especially with penny stocks. It's not true with small cap stocks. It's not true with big board stocks. Um, it's it's solely focusing on penny stocks. Okay. Um, what is the difference between a pump and a organic move? Well, a pump is when a promoter gets paid to talk about a certain stock. Okay, and they'll hype it up and they'll say the stock's going to $100, and it has this going for it and that going for it. It has all these positive things going for it, and they're getting paid to say this. Okay, and sometimes the stock can react well and go higher based on these pumps. More times than not, they don't go higher. More times than not, they actually do nothing or go down. Um, but you might see people talk about playing these pumps, and the problem when you do that is when they do get pumped up, okay, and the promotion is working. Well, when the promo ends and there's no one left to talk about the stock can dump, okay, and that's where you get the term pump and dump. Um, and so, what is the difference between a pump and an organic move? Well, an organic move just means it moved naturally. It wasn't. It's not moving to new highs based on somebody promoting it. Okay, it moved on to new highs or broke out um, due to a really good trading chart. Okay, good volume and just good natural movement, stuff that you'd see in big boards. Which one is better? Organic is a lot better. If you can avoid playing pumps altogether, I think you'll be a lot better off. I know you might see a lot of websites talk about all their huge winners and whatnot. Well, find out if they are paid or not, um, because organic moves are better. They're more common to find an organic move. They have better volume, and they're a lot less risky. Okay. Where can you find a list of organic moving stocks? Well, on our website, thestockgarage.com. We post nightly watch lists that include penny stocks, small cap setups, and big board / option trades. Okay, that's a great website to go to learn pretty much everything you need to know, I think. And we're trying to add more and more content to the site to help everybody, no matter what level of trading you're at. Um, so that we have what a penny stock is, and some of my recommendations in terms of don't don't hold them for a very long time, and focus on organic moves versus pumps. Where do I start? What type of broker should I get? Well, in my opinion, if you're going to trade penny stocks, E-Trade Pro is the best to go with. E-Trade Pro is this platform you see behind us here. This is all E-Trade Pro. And the cool thing about E-Trade Pro is they have the best charting for penny stocks. They have all sorts of scanners that you can customize for penny stocks. And they have very low commissions. And if you trade a lot, you can get that commission even lower. So what broker do I recommend? I think E-Trade is the best. For people who don't like E-Trade, SureTrader, which is a broker I've never used, SureTrader is another good broker that I've heard a lot of people say positive things about them. And the cool thing about SureTrader is that there is no PDT rule, which is pattern day trader, which segues into the next segment. What is PDT? Well, if you have a margin account, which most people are going to open and have a margin account, you are allowed to have 3 day trades per rolling 5 business days. So Monday through Friday, you could trade 3 times, okay? Because that's a rolling 5 days. You could day trade. What is a day trade? Day trade is you buy it and sell it on the same exact day. If you buy it and sell it tomorrow, that's not a day trade, okay? And it would not count against you. But you're allowed 3 day trades per rolling 5 days. If you do a fourth day trade during that period, your account will be hit with pattern day trader. And what this means is you will only be allowed to trade with settled funds. So what is a settled fund? Well, if you take a trade, okay, and you buy it and sell it, no matter when you sell it, if you're on pattern day trader, okay, so the day that you sell it, you then have to wait an additional 3 days before that money is settled and you can trade with it again. So a settled fund, it takes 3 business days for the money gained from a stock sale, okay, which means when you sold your stock, to settle, aka become available to trade. So for example, if I bought something for $1,000, okay, and I sell it for $1,100, I can't use that $1,100 for an additional 3 business days. Okay, that money is locked. Pattern day trader is a very, very frustrating thing for a lot of people. I would say understand this rule and don't test it. A lot of people try to test it. Don't. If you know, for example, if I have used 3 day trades in a week. Oh, one other key thing. Under $25,000. If you got over 25 grand, don't worry about it. But if you're under $25,000, you need to understand what pattern day trader is. But let's say I have $2,000, okay, and I have done 3 day trades already in the last 5 business days, okay, and I know that I cannot do another day trade. I have to wait until one of these day trades from the previous 5 business days comes off, okay. I have to wait, and let's say that there's a stock that I really want to buy. Knowing that I have no more day trades to use, I need to have the discipline to not get in. A lot of people don't have that. A lot of people think that this stock is the very last stock that's ever going to run in the world, and they have to buy it. And they buy it, and the stock does not go. The stock does not go to plan, and now they can't sell it because if they sell it, they're going to be hit with pattern day trader. Okay. So then they think, okay, well, I'm just going to hold till tomorrow because I don't want to get hit with this pattern day trader rule. And the problem when you do that is if it's going against you, you could lose a lot of money, okay? And had you just waited until the next day, the next day that one of these previous day trades got wiped off, then you would have had more flexibility and you could have bought it and sold it again on the same day. So my point is, have discipline. Don't put yourself in a position where you're going to get screwed over. Okay? So many people do it. Don't do it. Avoid that rule. But the advantage of SureTrader is that there is no pattern day trader rule. They're an offshore broker and they don't have to abide by the same rules. And because of that, they don't have any pattern day trader rules. So with $2,000 with SureTrader, you can literally buy and sell as many times as you want and never get hit with this type of rule. The problem with SureTrader is their fees are very high, from what I understand. What is a good amount to start with? I would say $2,000 is a good amount to start with, and then you would use $300 to $500 per trade. Don't use. A lot of people try to use like $80 or $100 per trade, and if you think about, I'll have to buy and sell. That's depending on what your commissions are. That's a lot of money in commissions, okay? And let's say you bought $100 worth, and the standard commission rate is $10, okay? So if you bought $100 worth of stock, and you paid $10 to buy, and you also have to pay $10 to sell it, well, now you're already down a total of $20. Right off the bat, before the stock is even moved, you know that you're going to lose $20. Okay, so now you need the stock to go Um, you need the stock to go to 20% just to break even, and you need it to go higher than 20% to start making any money. Okay, well, let's say the stock goes down 10%, and you decide to sell. Okay, and so you sell it for $90. You lost 10%, and then you will also lose this $20. So a 10% loser will turn into a 30% loser after commissions. This is why it's important. Don't play with such a small amount of money, because you're just going to erode your account quickly. I would say $300 is the bare minimum to use on a penny stock trade, um, just because you have to make so much money just to cover your commissions. So what should I look for? Let's bring this down to the next page. What should I look for? Now that you have your broker, deciding what broker you're going to do, now that you have that figured out, and you're going to start looking for stocks to maybe trade. Okay? Three key things to look for. Volume. Does it trade actively? Does it trade $60,000 per day? How do you figure out how much dollar amount it trades per day? You take the average share price on the day. So, for example, let's look at NVLX. NVLX yesterday traded an average price, just do a round number, let's call it 29 cents. We spent most of the day trading right around this 29-cent level. And it traded on the day 40 million shares. So, to figure it out, you take 40 million shares times 29 cents, and you're left with a little over $11 million. Did this trade more than $60,000? Absolutely. Tons of volume on NVLX. That's how you could figure out how much dollar amount it trades a day. Or does it trade at least 500 times per day? To figure that out, if you're on eTrade Pro, it's very simple. You grab a watch list tool, watch list. You type in the stock, NVLX. You click on this down arrow. You go to columns. You go down to number of trades. Right here, add it to the list. And now it's telling me number of trades. It traded 4,524 trades. Is that more than 500? Yep. So that this would check out. This would be okay to trade according to this volume criteria. Trading history. Does it have a history of making good runs? Let's go look. Let's look at NVLX, the daily chart. Let's look at like a 1 year. I see a couple periods where it made nice runs. Okay. So does it have a good history of running? Yes. That's another criteria check. And then find the patterns. Okay. What type of pattern is it in? Is it in a bull flag? Is it in a wedge? Is it in a channel? That type of stuff. If you don't know what I'm talking about, it's okay. You're brand new. On the website, thestockcrouch.com, if you go to click on charting, we have a list of some of the most common charting patterns out there. Okay? And I would say learn what a bull flag is and learn what a wedge is. Learn those two patterns, and you'll be a lot better than most traders. If you can learn what a wedge and a bull flag is, you're going to be way ahead of the curve, I think. So find patterns. Those are the three things that you should look for when trying to determine what stocks to trade. What should I ignore? Ignore the news, the fundamentals, and the story. News, in my opinion, does not matter even on a big board stock. It's all up to price action. I've seen stocks get tremendous news like an upgrade and the stock goes down. News just doesn't matter. It's the price action. It's what the market thinks of the news is what matters. And that can all be measured by what the chart is doing. Ignore the fundamentals. These are penny stocks. There's a reason they trade for pennies. They do not have good fundamentals. If you start looking at fundamentals, you'll never trade one. Also, remember, we're not long-term trading these. They're not good investments. They are good short-term trading vehicles. Therefore, the fundamental story should not matter at all. And then the story itself, meaning, does it have product launches coming up, or does it have a new celebrity endorsement coming up? That type of stuff. That don't matter. Only thing that matters is the chart. Okay? Focus on the chart, learn how to read charts, all that type of stuff. Where can you go to learn more? You can search my other YouTube account at Cam24Trader. Stay on this YouTube account, subscribe. We're going to post a bunch of videos over the next few weeks. And go to my website, thestockgarage.com, where we have tons of videos uploaded there. We have that charting section where you can go learn all the charting tools and all the charting patterns. And then we have the nightly watch list where you can go see what stocks that I personally am looking at and think have favorable trade setups. Thanks for watching part 1. I'll have part 2 up shortly.